recording on this computer. So, okay, 6:07. Gonna give it one more minute. But like I said, UJ right now is looking quite, UJ already completed his bearish push. Now the only thing that we need to see is well, where gold goes depends, right, on the strength of the US dollar. Like I said in the weekly breakdown at the beginning of the week, I expected a very bearish dollar. But at this moment, it may seem like it's going up for a retrace because of the fact that the stimulus package was dropped for the US dollar, right? And that stimulus package can help out a lot. So it can possibly bring the dollar. Yeah, I'm bull on UJ as well because like if you look at the fib now, that's showing quite a bit of rejection on UJ. So I'm probably going to switch my bias to bull because we should have entered the sell up here, and we did, but our TP was like over here in the golden zone. So yeah, we need to make sure that we're eyeing that. Okay, cool. It is 6:08. I'm going to go ahead and get started. Feel free if you guys want to talk. Feel free to drop something in the chat. It'll pop up in my taskbar, and I'll be able to address you guys as as you guys want to ask questions. As for people who trickle in, that is not a problem. This chat is going to be recorded, but just make sure you guys mute yourselves and make sure that you guys are paying attention when it comes to this. But let's go ahead and get to the presentation. So the big banks are something that a lot of people think is a myth, right? And a lot of retail traders don't even know what it is. A lot of traders don't know exactly what big banks are, right? And how they manipulate the market. So that's what we're going to be considering today. So when it comes to the market, right, who controls it? Who do we think controls this market, right? Is it just us? Is it just does just the economy control the forex market? What is a pair, right? A pair is basically the strength of one currency against the strength of another currency, right? But who controls that? Who controls that strength? Is it just, is it just a random thing that controls the market? Is it just every purchase that is ever made? What controls the market? Well, we're trading against an entity, right? We're trading against an enemy, but a lot of people don't know who that is. For example, say you were a prize fighting boxer, right? And you had a huge fight tomorrow, right? Would you be studying your opponent? Well, the correct answer is you should be, right? You should be investigating your opponent. You should be trying to understand them and analyze them as best as you can, because if you don't, right, you'll end up losing that fight, right? And the same thing is here. For some reason, traders don't do that in foreign exchange, even though it has to do with money, right? So who is this entity that we're fighting against? Who is this entity that we have to study? Well, who it is? Investment banks, right? Big banks. These big banks, what happens with these big banks is that they control the market because they have the most money, right? Personally, I don't have 3.8 trillion, right? Like JP Morgan does, right? JP Morgan has 3.8 trillion. So if they have 3.8 trillion, they can put 3.8 trillion in a sell for UJ, right? And UJ is most likely going to go that way, right? Because not many people could compete with JP Morgan. And let me explain to you why. So here are the kings of the market. The kings of the market are Deutsche Bank, Citibank, JP Morgan Chase, HSBC, and some Chinese banks and Mitsubishi, right? These, the Deutsche Bank, Citibank, JP Morgan Chase, HSBC, these Chinese banks, Mitsubishi, they control billions and trillions of dollars under them, right? Some of them are investments, right? Some of them are in liquidity. Some of them are here and there, wherever. But they can pull this money, right? People that invest in these banks, they put money into their savings, right? So now the money from the savings of these people belong to the banks, right? If we all went to the bank right now and wanted to withdraw our savings, they would close the bank immediately. They would close it, right? They would close the bank immediately, and they would not allow you to, right? They'd pull out some like fine print clause that says, you can't do this, you can't do that, and it would stop us from doing so. Why would it stop us from doing so? Because if we all withdrew our savings from the bank doesn't have that money on hand. They don't. What they do is they put it into the foreign exchange market. They put it into the stock market. The reason why the foreign exchange market exists is because banks exist. If you look back in history, right, the foreign exchange has existed in forever, right, since forever. It's existed ever since, there were different countries that had different currencies. But until the creation of the markets, right, until the creation of the banks, right, the United States Bank, the Federal Reserve, which was in the 1830s, right, under the presidency of Andrew Johnson. Sorry, not Andrew Johnson. $20 bill. Forgot his name. Andrew Jackson. My bad. What happens with Andrew Jackson, right, is he creates the market. Now, those banks start controlling where money goes and how money flows, and that's exactly why when the creation of banks happened, the creation of the forex market also happened, right? The creation of the actual forex market also happened. Now, before they just moved in candles, right? They just moved in little papers, like slips of paper that they would have to read, and try to invest their money wisely in those directions, right? So it was much more primitive. But these kings of the market, like JP Morgan, right? These kings of the market, what they would do is they will try to swing money one way to favor their investments, right? So let's keep going. What do? The banks need extra money to make the market go up and down, right? Even though JP Morgan has, these 3.8 trillion, it doesn't necessarily mean that they can use them immediately, right? They can't pull all of their 3.8 trillion into one single pair. They won't do that, right? Could they? No, because a lot of their money is held, right? A lot of their money is here, wherever. It's not available for use. So what do they need? They need extra liquidity. And liquidity is basically just money that you can spend, right? Now, where do the banks get this money? Well, they get it from you. To be honest, they get it from you. They get it from spot forex traders and retail traders, right? They get it from the brokerages that they own, right? Every single time that you lose, where does that money go? Say I just lost $120, right? I lost $120 earlier on a US 30 trade, right? What happens? What happens? Well, that money didn't go to my broker because that broker is owned by a bank. That broker is owned by a bank. So since that broker is owned by a bank, they take that money and then they send it over to their bank, right? They take a split fee and then they give the rest to the bank. That is why the banks stay rich, right? Now, economies all over the world are also where, these banks get their money from because their investments become profitable, right? Their investments become, their business dealings become profitable, and that's where they get more money to spend, right? But the majority of their money that they spend in the forex market comes from spot forex traders and retail traders. Comes from the majority. They steal from the majority, right? Let me show you how they do it. So how do they do it? Well, how they do it is banks can see where traders' money is sitting and who has orders where. So every single time that you put an order, right, into your broker, say you go into your MT4 and you have Hugo's Way, or you have ICT, or you have IC Markets, or whoever, right? KOT. The banks that own those brokers can see it. They can see where your money is. They can see there is this many traders going long. There is this many traders going short. There is this many traders on this pair, right? They can see their stop losses. They can see their take profits. They can see everything, right? This is where the majority of traders are going, right? So if the majority of traders are going long, they can see that the majority of traders are going long. And long just means buy, right? And short just means sell, okay? Most traders have horrible money management, meaning that they over leverage, right? They have a huge account, but they over leverage it, thinking that their account can hold right on a big pair like US 30. It can't, right? Truth is, it can't. So what happens? They'll lose anyway. So the banks really aren't concerned about what happens to them in the future. The only thing that they're worried about is really where the majority of these traders are going. Because at the end of the day, right, the ones who end up losing money are the banks, right? If you win, if you're a profitable trader, then you end up taking from the banks, right? They're the ones losing money, since they're also the ones controlling the market. You do not want to be popular in the foreign exchange market, meaning you do not want a large number of you do not want yourself to trade where the majority of people are trading. So you do not want you don't want to be trading where 70% of other traders are going, right? You don't want to do that. And there is one tool that is going to help you guys understand that. And there's going to be one tool that's going to help you guys actually trade much better, right? So now let's go on a little example, right? Let's go on a little whiteboard example. Let's take out the trusty whiteboard. So say you are on GBP USD, right? Let's say you're on GBP USD. Let's say this is your pair of choice. Whoops. Let's say you just like how it sounds, right? The pound dollar, you just like how it sounds, right? And you're trading it. Say you go to this tool that I'm going to show you and you see that 68% of people are going long, meaning buy, right? Now, you also see that the rest, right? The 32, is it? 32% of people are going short. Now, think about this from a bank's perspective, right? Think about this from a bank's perspective. Say that you are a bank, right, with multiple billions of dollars in the market. And then you say, well, I have the knowledge, right? They know where they're going and they can predict the future, right? Must be nice. Why? Because if you had billions of dollars in the market and you knew where people are going and you can take that money from them, would you take it? Of course you would. Of course you take it, right? Because you're a business. You want to be profitable, right? You don't care about these numbers, right? You don't care about that there's people trading, their last penny on going long. You want to take their money. You don't care, right? You're a bank. So what happens is this. The banks see this. The banks see this and they go, well, time to rob them. So what do? They give you a bit of price pushing up, right? More buys are stacked. Say a lot of buyers bought down here, right? More buys are stacked here. People start over leveraging. Okay. And then price will do this. Okay. And this is where the banks start, this is where market manipulation happens. Okay. So you saw a little bit of blue. So you may think, oh, maybe I entered under retracement. Or, oh, maybe it's just going back to retest support and making a double top, right? Or sorry, a double bottom or something like that, right? You're thinking like a retail trader, and they know that. So what they're going to do is they're going to push price a little lower. And this is where a lot of these buyers, right, they get their stop losses hit because they see that the majority of stop losses are right here. They see that the majority of stop losses are right here. Their stop losses get hit. But then it does this. People re-enter. Buyers re-enter because they're thinking like retail traders. What they don't know is that the sellers who sold right here, right? Some sellers who sold right here, and it goes both ways. Some sellers who sold right here just closed out because they say, I don't want to lose. It seems like there's a lot of bullish momentum. I don't want to lose. So they close right here. And what they don't know is that they would have made money had they just stayed in, right? But again, they didn't. Some are disciplined. Some say, okay, I'll take the loss and I won't get back in, right? Some are not. So what they'll do is they'll start going the other way, right? They'll start revenge trading. Again, another retail trader mindset. They'll start revenge trading. So they'll put in a buy after their stop loss got hit, right? They'll put in another buy and another buy, and they'll over leverage their buys. And what happens? Oh, well, their whole account just got blown, right? And the banks now have their money. What happens? The buyer stop losses get hit, but then it starts going back up. The buyers say, oh, well, our stop loss was just off by 20 pips or something like that. So what are they going to do? They're going to try to re-enter. And they re-enter at a tougher lot, thinking that this is finally going to be the push to the upside that they wanted, right? That they supposedly analyzed. Would you hold it? Would you hold this? Say you were a buyer, right? Say you were a buyer. Would you hold that position? Or would you see blue, take blue? Drop it in the chat. Tell me what you guys would have done. You would have held, okay? See blue and run, okay? And there's no judgment. Tell me. I want to be able to help you guys. I want to be able to learn what you guys are thinking, and then from there show you how to look at the market correctly. So there's absolutely no judgment. So Adnan said hold. So they would hold. Okay, so you entered price here. You're blue, 20 pips, let's say. You're gonna hold. You're expecting, a bullish push. Okay. See blue and run. Kyle said see blue and run. Okay, that's fine. You see blue, you take off. You would stop trading for the day and start fresh tomorrow. Very good mindset. Very good mindset. Very good mindset. So you'd take your profit, you'd get out, and you'd say, okay, I took a loss. Cool. Let's go refresh. Let's go look at some other charts. Let's go look somewhere else. Awesome. Cool. What else? What else? What would you guys say? What would you guys do? Tell me. I need 3 more answers before I continue. 3 more answers. I want you guys to be interactive. Mal, what would you do? Rad said stop the trade. Okay. All right.
What was the question? If it was the stop loss was it?
Yeah. So say 68% of people are long, 32% of people are short. The buyer stop losses just got hit, but the market retraced upward. More buyers just entered the market. What would you do? And you entered right here. Would you hold this trade or would you take profit and run?
I'll take profit and run.
Take profit and run.
Yeah.
Right. Take profit and run. Okay. So now let's see what price would have done. Price would have done that for 2 reasons. For people who I've taught before, you guys know my saying, impulse, retracement. Impulse, retracement. Now, for people who are buying this, right, they see this and they're saying, oh, this is finally a swing to the upside that we need. No, that's simply a retrace, right, on the way down. But they don't see that because they're still thinking in support and resistance. They're still thinking in a retail trader's mindset. And what they don't know is that the market is manipulating their trade right now because 68% of people are going long. 68% of people are buying. And the bank said, we do not want to lose 68% of our capital here. We want to lose 32% of our capital and win 68% of our capital. So that's exactly why they pushed price down, right? This right here is where banks entered the market for a sell. This is exactly where they entered. This is where they took profit. And that is why the retracement is formed, right? Because if 68% of people are buying, right? What happens? What happens? When the biggest entities in the market take profit and all of that huge amount of money gets taken out, what happens? Now the bulls control the market, and that's why that retracement happens. And this is where banks enter again for a huge drop, right? And they just robbed all of that 68% of people of their accounts. Cool? Does everybody understand that example? Everybody understand that example? Cool. Awesome. Do you guys understand how that market manipulation works? Do you guys see that difference? Now, there's a tool that will help you use this. There's a tool that will help you see this, okay? So let's go back to our presentation. There's a theory that I want you guys to understand, right? And it is called the blackjack theory. Now, casinos use this. The most professional psychologists use this. The most professional marketers use this, right? Basically scarcity, right? So what they say is casinos rig their games to allow that dumb money gamblers to keep trying to make up their losses. Say we went to a casino and we went to play blackjack, right? And I lost the first time, right? And I said, I need to make my money back, right? So I play again and I lose again. Ah, damn, right? And now I enter again, and this time I win big. I win big, and I felt that I read the cards perfectly, right? I did a couple research on YouTube videos. I have a strategy in my head, and my strategy worked for this time, right? And I won big. I won up. I won my losses and then some. Now a smart money trader would have gotten out of there. A dumb money gambler will try to triple, double, quadruple their profits. And what are they going to do? They're going to come back. The casinos know that. That's why they're profitable. If you really want to think about it, casinos are only profitable because they prey off of people being dumb. Right? So that same gambler is going to come back to that table and is going to sit down and is going to double up. It's going to bet all in, right? And what's going to happen? They're going to lose everything. And they're going to come back again and put in more money, right? Because they think, "Oh, I can make it back. Oh yeah, my strategy worked last time. So I'm going to do it again. I'm going to do it again. I'm going to do it again. I'm going to do it again." That mentality of I'm going to do it again, the banks are going to feed you, right? The casinos are going to feed you these small little crumbs, these small little wins here and there to keep you in the game because they need you, right? They're not going to make you lose everything in one go and they're going to, for you to get knocked out completely out of the market. They don't like that, right? They don't need that because then they don't have your liquidity. So what they're going to do is they're going to feed you these small wins or these big wins, right? They're gonna feed you one big win, and you're gonna be rejoicing. You're gonna be posting it all over Instagram, recruiting people, and you're gonna be like, "Oh yeah, yeah, I did this, I did that." When in reality, the banks fed you that win so that tomorrow they can make you lose 3 times that amount. They're just setting you up, right? The banks make you lose consistently, but then feed you psychologically. That is exactly why on the first class that we ever did with Imperial Global and Empire Trade Group, Mal said something very important. Mal said that he hates to see new traders win when they don't know why. And this is exactly why. Because we hate to see new traders win when they don't know why, not because we're being mean or we don't want to see you profitable, but because of this reason. Because if you consistently win, knowing why, you will become a smart money trader. When you win once, twice as a new trader, and you don't realize that you were over leveraged, you were risking your whole account, or that your technical analysis was way off and you just got lucky that time, you're going to keep doing what you're doing and you're going to blow your whole account the next couple of days in. And that's what we don't want to see, right? So that's exactly why Mal, because a couple people hit me up and he said, like, well, why do you say that? Well, that's exactly why. Because the banks will keep preying on you despite your wins. So let's keep going on. So there is one example, and I love talking about this example to all new students, and a lot of people who have been with me for a while. You guys will remember this because on the one-on-ones that I used to do for free, you guys will remember this example. I've always used this example. It's something that in my trading career, my mentor, he was the one who showed me this, and that's actually a trade that changed his life, right? Simply because he read the banks like a book, right? He read them correctly, and it changed his financial situation amazingly, right? He became he became a seven-figure earner off of this trade. This happened back in January, I think 15th of 2015, January 8th, 2015. And I'm going to show you guys what happened here. So the Swiss bank, right? This is the Euro Swissy, right, or the Euro Chef. Basically, this is the euro, right? The European unit of currency, right? And then the CHF, which is basically the Swiss franc, right? The Swiss franc. The Swiss franc has always been known to be a safe currency, right? So there's usually not a lot of volume going in, especially on EuroChef, right? Because the market just kind of goes in one direction and just keeps going in that direction, right? Now the bank released some news, and they said that there was a peg, right? That the EuroChef, the value of the EuroChef would not go below 1.2 euros. And they said that they put it all over international news simply because the Swiss bank was doing very well, right? They were doing very well. They had a lot of their value in gold. They were being prosperous, all that, this, that, whatever, right? They were being very profitable. And they said that, they wouldn't go lower than 1.2 euro, right? And that's completely fine. Everybody was rejoicing, but then traders, right? Read those retail traders said, "Oh, well, I trust the banks. If they say that the Swiss bank isn't going to go below 1.2 euros, then it surely won't go beneath 1.2 euros, right?" So what did they do? They said they stacked their long entries, right? They went 70 to 1 long. 70 to 1 long. Every single, right? 70 traders were buying Eurochef. Only one of those 71 traders was selling Eurochef. Only one. The banks can see that. The banks saw all the over leveraged accounts that were just like waiting at the peg, just boom, 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 right? This is what the Eurochef was doing. Let me show you. This is what the Eurochef was doing. So say, the Eurochef was just kind of doing that. The peg was right here, right? And the Eurochef just kind of did that. And a lot of people were entering right here for buys. Enter, 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 because they were expecting this thing to go boom, right? Because this is the floor of the market, right? It's not how much you're gonna lose; it's only how much you're gonna win. Would you consider this an example of using news to place a trade in the opposite direction? No? That's a thing I'll get to at the end. Okay. So that's what the Eurochef was doing. It was just bouncing along this peg, right? And a lot of people got out of their cells because they said, "Oh well, if this is the floor of the market, then it's only how much I'll win. I'll win. I'll swing trade it up, right? I'll swing trade it up." Cool. The bank said, "Okay, no problem." Yeah, yeah. This is recorded, but I want you guys to stay on the call. I don't want you guys leaving. So let me show you guys what happened. Are you guys drop me in the chat? What do you guys think happened? What do you guys think happened to the Eurochef? Tell me. I want to hear. I need 5 answers to keep going and show you guys what happened. Okay, tanked, went all the way down, went the opposite way. Mal, have you seen this example before? Yeah, you've seen it. I think all professional traders have seen this. Yeah. Yeah, all professional all professional traders have had their mentor tell them this. Watch this. I have never seen this happen before ever in my trading career. Yeah, I know people who live through this too. Do you guys see that? Do you guys see that peg right here at 1.2? You guys see that peg? It was bouncing on that peg for days, right? For days. It was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 20, for almost a whole month. It just kind of sat there. For a whole just month, it just sat there. Right? Would you have taken that sell? Probably not. A lot of people didn't. Now there's a very sad thing to this example, and I'll tell you why. Right? It's horrible to be on the wrong end. It's horrible, right? My mentor, his financial situation changed when he took that sell, because he took the sell as soon as he saw this wick up. He held that sell from up here, and he said, "I'm not letting go of that sell." He stacked entries on the sell, and keep in mind, this was 70 to 1, meaning this was probably like a 99% long, right? What happened was he stacked entries at the top. He had like I think his account was at like 40,000. I think it was like 40,000 his account, because I mean he's been trading for a very long time. And it was kind of like he said, listen, I'm not gonna let go of the sales. I'm just not gonna let go of those sales. He stacked entry. He almost over leveraged his whole account. And what happened? He waited, I think, 16, 17 days. This is a picture, Ava. I can't zoom in for a second. But what happened? I'll zoom in a second. So what happened is he over leveraged on his account, and this is the only time you notice the over leverage because he over leveraged his account and he ended up making 6 figures that day, well over 6 figures that day. Do you guys see the most blatant example? The banks didn't even try to hide it. The banks were just laughing because they took every 70 traders to one loss, 70 wins to one loss. So they were handing the winners of this trade happily their money, their little crumbs, their little pennies, right? Because they just took the majority of the market's money and they just said, "Thank you very much. Good night." That's all they said. And they were over there celebrating at their giant estates with their new money, right? With champagne and all this and all that. Brokers went bankrupt, right? A whole platform that basically mixed the United States and Europe as a trading community, right? It had to get bailed out by Forex.com. And the whiplash was so horrible, right? The whiplash was so horrible that even that platform went out of business. That platform went out of business. Forex.com almost went out of business. Brokers just completely went bankrupt. Banks went bankrupt, right? Smaller banks went bankrupt because keep in mind, in the bank industry, it is a big fish and a smaller fish. And if I can take your money, I don't care who you are. I'm going to take your money. So if your traders are going long on this trade, oh, sucks to be you because your money's now mine, right? Because those smaller fish use the bigger fish as brokers. And those brokers are absolutely thriving, right? Because they're like, oh, thank God, right? The banks moved price this way. Let me tell you the specific details. This crashed. The Eurochef crashed in a way that you will probably never see again, right? Over 2,200 pips in one day, in an hour, honestly. The saddest part is this. Price moved so fast, and you have to realize in a crash, who here saw the Dow Jones crash like a month ago? Who here saw it? Because I was looking at my computer, and I made like 2,000 that day. I could have
I
made
think
more.
almost every professional trader probably saw that crash.
Yeah. A lot of professional traders saw that crash. A lot of professional traders did. Right? I personally watched it go from the top and then I just kind of looked at it like, what are you doing? Right? I just looked at it like, what? Right? But what happened? It moved extremely quickly. In the span of like 3 hours, it dropped like crazy. Now, what happens is stop losses don't get triggered if if money is moving stupid fast. That's why in volatility or in binary, right, when you trade boom and crash indices, stop losses don't work. They don't work. The reason that they don't work is because boom and crash use they move so fast that stop losses don't even get triggered. So what happens? This is forex, right? This isn't stocks, meaning that your account can't usually shouldn't go past zero, right? Because your broker margin calls you. The thing is, guys, broker software couldn't even register this hit until after it happened. So people quite literally went bankrupt because they had to pay the broker. Now you owe. Traders were completely knocked out of the market simply because they didn't understand market manipulation. Now you understand how the big banks work. How do you avoid this? And this is where the slides end, but this is where, the actual online presentation and application begins. You use sentiment. You avoid news, and you don't want to be the popular trader. I want you guys to write this down. And if you guys are taking notes, that's awesome. I want you guys to write this down. News are an excuse for banks to move price wherever they'd like. So you should not be trading news. You should be watching for its impact. Right? Say you have certain confirmation, right? Say you have a demand zone right on the bottom, and you know it's right on the golden zone, and you expect it to go up, right? And now price, but you see a lot of bearish pressure. So you're thinking, you're expecting, you know, a push up, but you see a lot of bearish pressure. And I'll show you an example here in a second. But then you see that news is about to come out. And you think, oh, red folder. Red folder, now that you guys have this written down, I'll explain something to you guys. So there are 3 tiers of news, right? There's green folder, there's green, there's yellow, and then there's red. Red means max priority. Basically what red means is, red basically just means this is going to have a high impact, right? So if you ever see like the WTI, you know, barrel count, that's going to affect oil a lot, right? But that's a red folder type news. Yellow is medium impact, right? Yellow just means that it could possibly move price faster. And green, basically, green or silver, depending on the platform you like, green or silver. It's basically just, it's just kind of like this could move price, but it's usually just a bit of financial news, right? This is just, you don't discard it, right? But this is just info, right? It's not really something that will affect the market. So if you see a red folder news, right, you should usually secure your entry, right? You should secure your entry because you think, okay, well, you know, I'm blue. I'm gonna move my stop loss up in profit so that, you know, if this retraces violently, I can go in for a re-entry and not worry about my not worry about anything else, right? So what happens? Right now you're red. You're so whenever you see say news drop, you don't want to trade that news, and I'll tell you why. So banks know how you think. Banks know how you think. They know you more than you know yourself. And I'll tell you what's going to happen. What's going to happen is this. You're going to see red negative news, right? So it's going to say USD. This is going to be red news, right? For US 30, say, you know, the unemployment rate that just came out. Let's go on a very recent example. And if Mel is in here, he remembers this because we both lost money on our personal accounts doing this. Red with the US dollar, right? Unemployment. Now, logically, you as a trader think unemployment, and as an advanced trader, you think, well, that's going to affect the DJ or the Dow Jones, you know, the US 30. That's going to affect indices, right? Because that's basically saying, oh, you know, unemployment, all-time high. It's like, whoa, you know, so then investors are going to pull out of the Dow Jones. And what happens with those investors out of the Dow Jones? Well, those investors out of the Dow Jones mean that the Dow Jones falls, right? These aren't manipulated by banks. These are stocks, right? And stocks are influenced by people. They're also influenced by banks, but mostly by people, right? So what happens? You as a saying, and then you see the result of it, right? The result. The result is bad. Right? The result is bad. So you see that the unemployment rate is bad. It's horrible. It's awful. So what do you think? Retail traders do this. They see that, they make the connection to the Dow Jones, and they say, sell. the Dow Jones. They say sell, 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 right? They over leverage their accounts. They put their baby 50 account, right, on a 0.25 on SPX, right? Because they can't go into US 30. And what does US 30 do? It goes like this, right? News drops right here, right? Gives them a little bit of blue. Oh, that was horrible. Gives you a little bit of blue. Then does that. And I'm pretty sure you guys remember this. Let me see if I can pull it up. Let's pull it up on the daily. It should be somewhere around here, right? It should be this candle right here. It should be that candle.
What did they do? They put their life savings in their baby account.
Right, exactly. What happened? What happened was this. I mean, no, for real. What happened was, where was it? I think it was a couple of days ago. It was right here. I'm pretty sure. When was this? No, that was February 3rd. March. It should have been March. I think it was right here. 13th of March. No, right here. This is what happened. This is what happened to them. News dropped. Boom. News dropped and everybody was selling US 30. But what happens? Since everybody's selling US 30, the banks see that and they say, oh, thank you for your money. Thank you for coming. Good night. And what happens? Boom. Shut up. Took all their money. All these retail traders just took all their money. Why? Because they relied on news. They relied on news to give them information that technical analysis would have told you that is going to retrace. Right? A technical analysis would have told you US 30 is going to retrace, so wait for a better sell entry. But they sold at the bottom, and because US 30 is expensive, right, they just lost a ton of money. Simple as that. And what are the banks doing? Well, they're celebrating. They're being happy. They're saying, thank you, come again to the casino. Thank you, come again to the Forex casino. Right? Because you're gambling at that point, you're not trading. If you don't have a certain confirmation and you try to trade off of news, right? If you don't have certain confirmation, meaning Fibonacci, meaning other tools like, you know, supply demand, other tools like, you know, some people like using the ADX. The ADX is fine. Not my favorite, but, you know, some people like using the ADX. Some people like using, you know, stochastics. If you're using these types of methods, most likely the banks already know where you're headed, right? So they're going to be one step ahead of you. That is exactly why price action, right, defeats any other type of any other type of system, because price action is the most reliable. Now, can price action be mixed in with indicators? Definitely. That's where you become a winning trader, right? Because if you ask Mel, if you ask myself, what do we use? We use indicators, definitely. But so, for example, Mel just showed me something that he's going to show Empire later on, right? Is he showed me one of his systems with MAs, and I was shocked. I was like, what is that? Because when you look at it, it matches up perfectly with your price action, with your fibs. And I said, whoa, that is cool. And what happened? Well, you know, we made some profit just testing out a strategy, right? So what happens? Now, you guys understand this, right? You guys get this? Yes? No, maybe I don't.
I don't understand why traders be trading news or fundamentals and they don't even understand technical analysis, because if you don't understand technical analysis, you can go broke for trading news.
Exactly. A lot of people don't just flat out refuse to technically analyze. Some people like to make their own system out of sentiment, and that's wrong too. Because if you try to make your own system out of sentiment, you're also going to go broke. Simply because of the fact that you are not. It's just trading off a sentiment isn't going to get you an entry. Just trading off a sentiment isn't going to properly risk you, right? Trading off a sentiment may reverse on you in a couple hours, right? So you need to learn your technicals before you even think about using sentiment.
Go past this light, then at the next one, take a slight right turn.
So that is news, right? News is basically, don't trade it, just keep it in mind. Okay, that's what I want you guys to see, right? Don't trade news, keep it in mind. Okay, can you explain price action versus TA? What is that? Oh, technical analysis. It's the same thing. So technical analysis is basically you just going in and saying, okay, well, I think technical analysis is basically you marking up a chart, right? So it'd be like, oh, whatever system you may use, right? Support resistance, be like, oh, there's a resistance right here, or there's a support right here, saying something like that. That'd be your technical analysis. The correct type of technical analysis is price action, right? That is something that you should be doing, but a lot of people do not. So that's basically what I'm saying when it comes to price action. Also, if you guys want to be looking at a bullish UJ, like I said in the beginning, you might want to be hopping in it. Are you already in a bullish UJ, Mel? He probably is. Now, what I don't want you guys to do is I do not want you guys to bring both. I don't want you guys to be two things. I don't want you guys to be emotional when you trade, right? And we went over that lesson, right, when it came to emotional trading, right? But I also don't want you to be the popular trader, meaning I don't want you to go into a trade where everyone else is headed. I don't want you to do that. Okay, so let's look at this, right? And you guys can use this at whatever moment you guys want to. It's called Daily FX Sentiment, and I'll put it in the chat. There are two places that you can see sentiment: Daily FX and FXSSI. Sentiment, and I think it's the same. Yeah, FXSSI. You can use both of these things. Now, both of these things, right, both of these platforms basically show you where the sentiment is going, right? So say you're going AUD USD, right? Let's see if we can look at it. I don't think we can. Can we? So we see in USD CAD, right? So currently in our chats, right, we are in for a sell in USD CAD, right? We were in for a sell in USD CAD. Now our technical analysis tells us that definitely, right, definitely, we're correct on a sell for USD CAD. But we also see a huge shift in people. Because an hour ago, 2 hours ago, when I checked this was the other way around, right? This was the other way around. What did it show? It showed a buy for sorry, it showed a sell, right? It showed majority of traders are buying USD CAD. So that's also another confirmation for you to sell it, right? Right now it seems like it's forming a double bottom, right? And what do we want to do? What we want to do is we want to rely on our technical analysis to say, okay, how is this candle closing? Because remember, banks also know that you see sentiment. So what can you trust? What you can trust is your technicals and sentiment mixed together. Right now, we're floating about 170 pips in profit when it comes to USD CAD, right? We're floating about 170 pips. Fine, awesome, dandy, right? But what happens? The tide has now shifted in USD CAD. The tide has now shifted from mostly buyers to mostly sellers. So what can we expect? Here's two things that we can expect. We might expect a double bottom, right? If we look at the chart, let's look at the chart if we want to look at it real quick. What might we expect? We're in a golden zone right now on the daily. If we're in a golden zone right now on the daily, well, we may be looking at a long position for USD CAD. What happens here? What happens is right now on the daily and on the 4 hour, this could be creating two things, right? This could be creating a double top. We needed to retrace the neckline, right, to verify that this is a double top, right? On the 1 hour though, on the 1 hour, right, it's showing a clear downtrend. So what do we need to see? We need to analyze our technicals. right? Because if we see it in this direction, right, we see that it hasn't yet created that lower high. So it's created a lower high here, but here, you know, that's a weird candle. So what we need to start, what we need to do, what we need to make sure that we're doing is we need to make sure that we are taking into consideration our fundamentals that all of you should have been learning, right? And not only your fundamentals, but also you should be taking into consideration where everyone else is going. Simply because a platform that tells you, okay, most traders are going this way, that does not mean that you start going the opposite way, right? So USD CAD, it's mixed. It's not even bear. It's not even bullish yet, right? It's mixed. Why does it say mixed? It says mixed because even though there is 65% sellers, technicals hold up on the sell. So at this point, the banks are saying, well, we can't exactly pull out of this operation, right? They can't shift their money immediately. So what happens? They kind of have to let it go. They kind of have to let it happen, right? And at this point, well, look at this. 73% of people are buying Eurochef. 27% of people are selling Eurochef. Let's go look at Eurochef. Actually, let's look at an even more close to home example. Let's go to USDJPY. If they have it here. Yeah, they have it here. 39% of people are buying, 61% of people are selling. Net short, net long. What's happening right now with USDJPY? At the moment, it's in the golden zone, right? So what could happen? What could happen is possibly a price reversal, right? A price reversal. We've seen this price, like this section of price, we've seen it be a very, very, very big and volatile zone. So what may happen is, you know, a big push to the upside very quickly, right? Considering that gold may want to move wherever it wants to go, right? Or it can completely disrespect this, right? It completely disrespect this zone and they just break down, right? Because what happens? Right now, what we want to see gold do is we want to see how gold reacts before we even touch UJ, right? But out of this sentiment, what do we see? We see that it's mixed. So at the moment, we shouldn't even be touching it, right? Because if sentiment is mixed, then there is no direct pull of where it's going, right? There's no direct relationship about where it's going. Now let's go back and look at the Eurochef. Let's go back and look at the Eurochef. Look who's buying and look who's selling, right? So buyers, Eurochef, right? Buyers 73%, sellers 27%. Where is price being pushed on the 1 hour? Well, according to your trends, it's going down, right? But again, more people are buying than selling. 73% of people are buying. So where is price going to continue to go? Down, right? For people who just entered right here, they'll be like, oh yeah, we're blue, we're blue, we're blue, we're blue, this many pips, right? Cool, awesome. You have completely neglected your technicals and you have completely gone off of what? Sentiment. Look at that. Why would you be buying in this market? Why? There's no reason to. There's no reason to sell in this, to buy in this market, my friend. There's no reason to buy in this market. There isn't. You say, oh, well, it broke that trend line, retested it, blah, blah, blah. It's still in a downtrend. You have neglected your technicals and only gone with sentiment. And that is why, you know, people who just trade off a sentiment fail. That's why. Sentiment should be something that you keep in mind and that dominates other things, right? But it is something that should work in cohesion with your technical analysis, meaning your price action. That's what I want you guys to take away from this. The banks move the market, but the market is numbers. Since everything is numbers, everything in this world is numbers, what I want you guys to realize is that even though the market is numbers, the banks cannot fool those numbers. So banks can't move a certain amount of money to, you know, into Eurochef, right, from their pocket to Eurochef immediately without the market, you know, having one big candle because price just moved in that direction extremely quickly, right? That just can't happen. Banks don't have that power. And that's exactly what we're able to trade with the banks. because they're basically telling us where they're going to go. So in this situation, we see the downtrend. We don't even have to think twice. We can just say, well, in this case, you should be trading with the trend. So they've taken 78% of people's money in this downtrend because they keep holding and saying, oh, no, it's going to buy, it's going to buy, it's going to buy, it's going to buy. Here's the thing. You shouldn't be a retail trader, meaning you should not be you should not simply be a reversal trader. You should be a trend trader, right? You should be looking at the higher time frames. You should be looking at the weekly. You should be looking at the monthly. You should be looking at all these things, right? And you should be saying, I am trading with the banks, not I am trading against the banks. Okay? That's what you should be saying. So if it's in a downtrend, should you be buying? No, you should not be, right? Unless you see an obvious reversal, right, on a bigger time frame. That is when you start buying. Okay? So did you guys understand this lesson? Did you guys what did you guys take away from it? How can I make it better? This training has lasted for about an hour, so I want you guys to give me your questions so we can get them answered as soon as possible. Do you guys have any questions? Gonna check UJ. Yes, I can check UJ in 1 second. Let me see. Excellent training. Thank you. Appreciate it, guys. Let's see. Excellent training. With trading with the banks, you can point out the institutional candles that you see forming, and form a lot around the what? Can you point out the institutional candles that you see forming, to form a lot around those levels? You can't ever try to predict where banks are going to put an institutional level. You just know you just need to spot when you see it, right? Can you post the recording? I got a yeah, I can, Tommy. I will. On UJ when I pull it up. Thank you. No problem, Joseph. No problem. For all of you that are not in Empire Trade Group, hit me up after this if you want to get into Empire. They have a special promotion. Thank you, Paulina, for giving us that promotion. If you guys sign up with us, you will get Mel, and myself, all of us, and as well as Melis's reach. It's going to be very, very important for you guys to start building up your business right now that it is at home. They teach e-commerce, they teach real estate, they teach blockchain, they teach crypto, they teach a bunch of other stuff that I personally can't teach you. I can teach you foreign exchange and I can make you a master in foreign exchange, but they can teach you a bunch of the rest of the stuff. So hit me up after if you're interested in joining. Whoever's in the Empire chat, please stay in the Empire chat so we can keep helping you guys. Anyway, when you see an institutional candle, right, you need to learn how to spot it. Meaning, let me show my screen. So this would be an institutional candle, right? This would be an institutional candle. This would be an institutional candle, right? Meaning that you see that happen and you know that price will eventually go back down there, right? But you do not do it immediately, right? It will not immediately get there. Meaning that even though you see this, right, you see it go all the way up, you see it drop, see it drop off the face of the earth, you know that this is going to correct itself, right? And then from there, it is going to come back down eventually. So as soon as you saw this reversal, you should have gotten in for a big downtrend, right? Because you know that the objective was going to be feeling this. Because overall, UJ is in a downtrend, right? And that's just how it's been. So just using those institutional levels is basically how you can't exactly predict them. You just have to know them when you see them, right? So for example, in gold a couple months ago, there was where is it? It was this one. Was it? Yes. So this 1611 candle, right, at the end of December, well, January actually, beginning of January. So what happened is this institutional candle right here actually went all the way up to 1611. Now, how did we know that that was going to be 1611? So at the end of last year, right, I called gold to 1600, right? And what happened? Well, gold went to 1611. Now, when I saw this, I said gold to 1700. What happened? Gold to 1700. How did I know that was going to happen? Well, simple. Because I knew that this wick had to be filled. And as soon as this wick happened, I immediately knew, oh boy, right, that thing's going to fly. So when I saw this morning star, I bought gold and boom, fired off. What happened? Easy TP. Okay. Now, the only thing that made me realize this was, let's go to the weekly. Will you look at that? That's the beginning of a zone. Don't you think? This whole zone right here. So first off, it'd be this zone, right? This zone right here. And then this top zone right here. So I saw this zone and I said, gold is right here. There's an institutional candle, so it's going to have a lot of momentum going to the upside. That's exactly why I said 1700. Because I said, oh, well, there's a zone right here, right? There was a lot of volume right here. Awesome, cool. Now what do I see after that? I see this institutional candle and I say, okay, to get up to that institutional candle, it needs to come up with momentum. So what happens? That it comes up with momentum and then fires off, right? When it fires off is when I got in for the buy and I said gold to 1700 and it hit my TP. I cannot see the chat and I don't know why. Institutional candles get filled quicker than scam wicks. They're the same. They're the same thing. Institutional candles, scam wicks, same thing. Your screen. What? You'll see it in the recording, my friend. You'll see it in the recording. So any other questions? Because this meeting has gone in for a while. I don't want to tire anybody out. So I want you guys to be asking questions. What on UJ? Yeah, well, a couple people asked me to look over UJ real quick, and UJ basically, I just said that there was the Fibonacci, right? The Fibonacci basically shows that it's in the golden zone right now, right? UJ is very connected to the DXY, meaning that it runs inverse of gold. So what happens in this situation is we expect UJ to either become bullish, right? But we want more confirmation before it becomes bullish because we're not retail traders, we're trend traders. And right now the trend is bearish. So what happens is we want to make sure that this level is respected or, and on the contrary, it is broken and then we can expect further downside. That's all I'm looking for on UJ. I'm just looking for confirmation. So yeah, any questions, anything else that I can help you guys with? Who wants to get started in Empire? Rina, I'm quite new to trading and sometimes I get quite nervous is about graphical analysis. Would you be able to do that to a closer trading on that? Yeah, sure. So tomorrow, Reina, you are in Imperial Global, right? Yeah, you're Imperial Global. So since you're in Imperial Global, you're in our team. For people who are confused, Imperial Global is the same thing as Empire, just a different name. So what happens is we're going to be, since we're your instructors now, basically when it comes to Forex, myself, Mel, and Mel are going to be running trainings with you guys, and we're going to be running trainings on basically, however, on how to basically use the market, right? And we're going to be teaching you guys how to mark up your charts and how to analyze your charts and make sure that you guys have at least a comprehensive view of what we see before you enter the trade, right? Do you ever look at the ADR, ATR when you're looking at price action? I look at the ATR, not the ADR. The ATR is something that is completely in for a different training. I could go on for hours about the average true range. The average true range is basically just how many pips total has price moved in a certain amount of time. The only reason you'd use the the ATR, is to basically show you like, okay, you can trade in this range or you cannot trade in this range because there's not enough volatility, right? So if there's low volatility, you have low oxygen, right? And if you have high volatility, you have enough oxygen to trade, right? Because it's going to move in a certain place and it's going to move decisively in that direction. So, Ingrid, you would love to join Empire. What do I need to do? Are you in Imperial Global, Ingrid? Yeah, if you're in Imperial Global, then you're already with us, basically. If you're on Paulina's team, you're with us. Yeah, if you're on Paulina's team, then you're already with us. Anybody who is not with Imperial Global or not with Paulina or on Paulina's team, DM me afterward. We can get you guys started. Everybody who's in the academy, I'm giving you guys this next month to get settled, because after that I am moving on to a different business venture, considering that this opportunity is just, it's so much better than what I can offer you guys in the academy. That's why I'm selecting those elite few that I want to stay with me, and whoever else wants to stay with me as well, you guys can also come over. Everybody who is already on Paulina's team, kudos to you guys. I'll see you guys at the next trading, which will be tomorrow at the same time at 6. And this is going to be all three of us. It's going to be Mel, Mal, and myself, and we're going to be wrapping up and synthesizing the information that we learned this week. Cool. Any final thoughts? Any closing comments? Anything that we would like to see? You're not on Paulina's team, but you're in Imperia? That is Paulina's team, isn't it? Well, you're with Milius, right, Ingrid? Yeah, if you're with Milius, you're with us. Yeah. Okay, cool. Well, I appreciate you guys coming. Thank you guys so much for being here. I appreciate all of you, every single one of you, for taking the time to come here. If you guys have any questions, please DM me. And if you guys have any concerns to join our group, I'm not accepting people for the academy anymore. Everybody who joins Empire, who joins our team with Empire, is going to have access to the academy, right? But I am not taking any more people from my personal academy anymore. If you get the gold package, you're going to be, under our personal back office and everything like that. So you'll get a lot more in-depth and more close view of what we see. But yeah, basically that's how it's going to work. So I appreciate every single one of you guys coming out. Thank you guys so much for coming. You guys have a good night. Take care. Please stay safe. Please stay inside. And yeah, you guys have a good night.